Now people see very nice building in AFC or the exchange or the facility, etc. But when we went back, 2017, I came here in a very cold winter, and actually I did ask myself, why should I come here? So cold.
Should I?
Now, after so many years, it's proven that our decision is correct. Recently, the Hong Kong market has been doing very well when compared with 2 years last year. To give you some numbers that I may remember, in terms of the daily turnover, if it was 2024, the daily turnover is about $15 billion a day, but now it's more than double. It goes to 33 billion US dollars a day. And in terms of the IPO fundraise, I think it's more than double when compared, or even triple when compared to last year. The senior leaders interaction. Okay. We saw a lot of our president coming to Kazakhstan. And people still very interested to say that the first country that our president visited after COVID was Kazakhstan. And I mean, this certainly will bring the investor and the corporate to consider coming here for more business opportunities.
Welcome to Business Insights, the podcast where we explore the ideas, people, and institutions shaping today's global financial landscape. Today, we are delighted to host Mr. Barry Chan, Managing Director at CICC, one of the Asian leading investment banks and a key player in both debt and equity capital markets. Barry has extensive experience advising issuers, governments, and investors across the region, and his work spans some of the most significant transactions in DCM and ECM. With his team, he also actively covers emerging markets, including Kazakhstan, providing a unique perspective on the growing financial and investment links between the markets. In this conversation, we will discuss CICC's role in regional capital markets, key trends shaping issuer and investor behavior, and the opportunities that lie ahead for Kazakhstan as it strengthens its integration with global financial centers. Barry, welcome to Astana. Welcome to Business Insights, and it's a pleasure to have you with us today.
No, thank you very much. It's my pleasure indeed to come here and be invited by you, Asa, to come to this interview, share some of the ideas that I may have throughout the years.
Okay, let's kick it off. So CICC obtained AIX remote membership back in 2018. And that time, AIX was just kind of in the process of being built. What was the driver? What was the main topic behind becoming a member of a stock exchange which was not mature yet?
I think I have answered that question, but not asked by you, but by my senior management at the time. They asked me, why, Barry, you said that we should go to Kazakhstan, especially for the AIFC, to become members. What made us to go there? And I said, because that was not the first time I came to Kazakhstan. In fact, I first came to Kazakhstan in 2012 when we did the Hong Kong listing for a company called Kasamif. And then they changed the name to Kasmino, and now we structure again, become Kasamif. So I found this country has a lot of, certainly people know, is the natural resources, oil, gas, commodity, metal, uranium. And we found this should be a very good opportunities, but nothing much have happened from 2012 until 2017 or 18 when there has an idea of AIFC. And I do see the attractiveness of coming to be members of AIFC. First is, as also my first answer to my management is, there wasn't a financial center in Central Asia. Are we going to believe that there never be a financial center in Central Asia? I mean, the answer to everybody is, certainly there will be. Yes, if there will be, then where will it be? It's more likely to be in Kazakhstan because it is backed up by the largest economy in Central Asia. So I think this is the easiest answer to the question. We go deeper is the financial center is structure. We see it with the international English law, which we found many of the international financial center, they are all based on English law. Not to say London, New York, and Hong Kong. And I think that Hong Kong is a very good example of relevance to AFC future development. And the third is, certainly, is the government support. We do see a very strong commitment by the government is to build AFC. I mean, now people see very nice building in AFC or the exchange or the facility, etc. But when we went back, 2017, I came here in a very cold winter, and I did ask myself, why should I come here? So cold.
Should I? Right.
But now, after so many years, it's proven that our decision is correct because all this structure has been there. I mean, you will expect that it will take some time to see something to be developed. And I think one is very relevant is I saw some of the experiences we had in China could be relevant here in Kazakhstan or even in Central Asia. Like in the 90s, when CICC was formed, we were formed in 1995. So it's a long time ago, 30 years. But where at that time in China, many Chinese companies, they're state-owned. The biggest company ours is state-owned. And the Chinese government want to restructuring them to make it more efficient, better corporate governance. How to do that? So the ideas come is, why don't we structure it? In the Western term, it's privatized, but in China we use restructure. We structure it to bring in some international investor with better corporate governance, independent directors. So that came, who can do it? No one in China have done it before. So that's come to idea with the CICC being a joint venture between one is China Construction Bank, the other is Morgan Stanley. So we have the best of the two worlds.
Balanced.
Yes, the China Construction Bank, certainly we know a lot of China, the regulation, the relationship, the resources, etc.
And they have can bring expertise and
exactly
and international.
Yeah, for Morgan Stanley, they brought in all this international practice. So that come up with CICC. And then we did a lot of very successful IPO for companies like China Telecom, now we call China Mobile. And we also did the oil and gas sectors like PetroChina, Sinopec. And then later on, we see the restructure and listing of some financial company like China Construction Bank itself, ICBC, ABC. And then later on, we also see some new economy like Alibaba, Tencent. And even today, the new factory, the EV, the tech company, all coming. So in the last 30 years, we see a lot of development in China that has been kind of resulted or assisted by a very good financial system. So AFC is exactly what I see could be the one that build a ecosystem, facilitate the fundraising and restructure or privatize of some of these central government-owned company, and also have some new company bring in. And in the last few years, we saw what? We saw Kazakhstan listing, we saw Kasmuna Gas, or the biggest state-owned company. And we also saw some fintech company, like Freedom, Kaspi. That is verify what I imagine or I expect that is happen, and happy that it's happening here in Astana.
And the weather is becoming much warmer, unlike in 2018. Okay, and we also see that there is a growing interest to the Central Asia. And in your view, what sets Kazakhstan apart from other emerging markets? And what were the factors behind your decision to expand into Kazakhstan? You already answered partially to this question. Maybe you can add something more.
In the last 10 years, people started to understand or to know what is Kazakhstan. it's very interesting. Like 10 years ago, when you ask any Chinese or even international investor in Hong Kong, what is Kazakhstan, where is Kazakhstan, they may have no idea.
Yeah.
And they have very good understanding about the U.S. economy, what's the threat rate, what's the inflation, unemployment rate. I think that's very interesting. They are not our neighbor, but Kazakhstan is the neighbor. So something needs to be done as to make people know more about this market. And people easily will associate like Kazakhstan is an emerging market. I mean, for me, yes. Yes or no? I mean, yes is you only have the financial center like AFC established 7 years ago. But in terms of the economy development, I said China. 30 years ago, China GDP is much, much, much lower than what we see today, even today. But Kazakhstan itself, it has a higher platform. I mean, it has more than $10,000 GDP. This is a very good footing for future development. So I think people don't understand or underestimate the strength of Kazakhstan because it already have very sizable or significant economy domestically. But after all this year, people know more about Kazakhstan, especially people in China. There could be two reasons. I personally believe one is the closer trade relationship. I mean, we can see a lot of export from Kazakhstan to China, and we actually see those logistics, the train, the express coming from China to Kazakhstan. And certainly more high profile is the senior leaders interaction. We saw a lot of our president coming to Kazakhstan. And people still very interested to say that the first country that our president visited after COVID was Kazakhstan. And I mean, this certainly will bring the investor and the corporate to consider coming here for more business opportunities. And the third reason could be the RMB internationalization, because it's also very interesting. In the past, two countries doing business, we have to use the third country's currency as a settlement. But shouldn't we do either yours or my currency? So I think this is giving us the opportunities for first come from the trade, but later on for the financial, we can all see these opportunities. As a matter of fact, earlier this year, as you know that, we did the listing for Jiaxing, the tungsten company. They have 100% of the asset in Kazakhstan. We also did the Chinese yuan bond issuance for
KMG.
Development Bank of Kazakhstan and KMG. The bonds were issued in Hong Kong, and we see a lot of interest by the investors. So my conclusion is that these three issues has already demonstrated the international, especially Chinese investor interest in Kazakhstan asset.
And yes, you mentioned about those transactions, and I think that was important for the market, and it brought new names. I'm not talking about KMG and DBK, but maybe Jiaxing was the good example of how Chinese company can enter the market, which is not the homeland market. We understand that the asset is here in Kazakhstan, which is tungsten, as far as I know. And do you see other transactions and how it's difficult to compete in the local? Because we know that a lot of international companies, I don't know, like JP Morgan, Citibank, they are already in the market for many years in a row. And you are, compared to them, you are a relatively new institution which is entering the market and competing with the market. How difficult is that? And is it mostly because probably investor base, it's different investor base. So what differs you from other investment bankers who are already in the market for many years?
I think first of all is after all this year, I mean, in the past, CICC very focused in working with only Chinese company or domestically because there's a lot for us to do already. And also because of our limited resources and experiences, we don't have that to go to outside China. But having said that, shortly after our incorporation, we already have offices like in New York, London, Singapore, Frankfurt, Tokyo, all these international financial center. What we have brought to all this new market, and to us, any market outside China, a new market, is our expertise in China, our resources in China, and also our clientele and investor in China. And if I would say that many of these international bank or foreign bank, they are good is what they have been doing good in what they have been doing good. Like any investor, if they are English speaking, they could be very good. If they are non-Chinese speaking, they could be good. But what our value to bring in is for some of these, first of all, the Chinese investor or Chinese corporate. Like take Jiaxin is an example. I won't expect like 30 years ago, when we first established, CICC will be able to bring some Chinese company or Chinese investor to here, not because they're not interested, because they didn't have money.
Okay.
They didn't have money where to invest. Even for China, I said when we did all this restructure for like China Mobile or ICBC, we have to attract international money to China, especially in the 90s. Like, that's just the case. And even for China Mobile, when we listed, we didn't list it in Shanghai. We listed in Hong Kong and we listed in New York.
Okay.
And majority of the money came from New York, some from Hong Kong, but zero from Shanghai because Shanghai has not yet developed the financial market yet. So what I want to say is 30 years ago, China or CICC helped this Chinese corporate to get the money, to get the fund capital from the international market or more developed market. So now after 30 years, they has accumulated some of their wealth and they are more mature and they are getting the experiences to be able to go outside for investments.
So investors are more sophisticated compared to the previous years now.
Yes,
right?
first of all, they have the resources. They have resources both in terms of the capital. They have the resources in terms of the international experiences. Otherwise, they don't know how to go to a market, for example, legally, regulatory, not to say the financial environment. So that makes sense. It's more ready for CICC to bring or to go together with all these Chinese company, Chinese investor to go outside China. That's also fit our strategy is especially to develop our business on the Belt and Road region.
Okay. And in terms of the nature of investors, so are they more institutional or there are a lot of retail investors? So you said that they're mostly domestic and domestic investors are investing. So what is the maybe percentage of nowadays international versus domestic investors in Hong Kong market?
Recently, the Hong Kong market has been doing very well when compared with like 2 years last year. To give you some numbers that I may remember, in terms of the daily turnover, if it was 2024, the daily turnover is about 15 billion US dollars a day, but now it's more than double. It goes to 33 billion US dollars a day. And in terms of the IPO fundraise, I think it's more than double when compared, or even triple when compared to last year. A lot of money coming from, I have to say, from the mainland Chinese investors. One of the good indicators is what we call the stock connect. Between Hong Kong Stock Exchange and the mainland stock exchange, there is a channel in sorts is that.
Like a bridge.
A bridge or a pipe that, for example, like mainland Chinese investor, if they want to invest in stock listed in Hong Kong, they don't need to go to Hong Kong. They don't need to open accounts in Hong Kong, but they can trade through their, for example, Shanghai broker, like Shanghai CICC.
I see.
And then Shanghai CICC place an order with CICC Hong Kong through the Stock Connect channel, and then they can trade the Hong Kong stock. And vice versa, Hong Kong investor, again, they can have an account with CICC Hong Kong, and then through the Stock Connect, trading Shanghai or Shenzhen stock. So I think that was established about 10 years, slightly more than 10 years ago. And the trading volume through the Stock Connect channel in the past, from zero, right? Now is more than 50%.
Oh.
So I think a lot of activities between this domestic mainland market, onshore market, and the offshore Hong Kong market has made the Hong Kong market, active again. I don't have exactly the number as of percentage of domestic or international investor in Hong Kong, but certainly the trend would be not to say the absolute value of international investor going down, but the percentage of these mainland or Chinese investors, they are going up. And just again, 30 years ago, no money to invest, we have to list outside. Now this company, they are good enough, they're experienced enough to invest outside the market. And secondly, we also see this a very good opportunity is the individual or the private wealth management in mainland China. Again, people has been benefited from the economic development in the last 2-3 decades. And what they need to do is they are sophisticated enough to go diversification.
Okay.
When you only have $10, you put everything in one thing. And you have 10,000, you may consider diversified. Now you 100,000, certainly you want to buy something more. So the diversification is also a very key drive for some of these main investors to invest in or through Hong Kong market.
Okay.
So CICC has also been very benefited from this growth of private wealth. If you go back to see our disclosure, I think one of the growth engine for us in the last few years is our wealth management business, which take care of the client for their private wealth management business.
Okay. Before we go back to Kazakhstan, I have one more question with regard to your company. As far as I know, and what we see from international investment banks, when they operate or deal with clients, they have a Chinese wall between DCM and ECM team. But in your case, we are working on both. You mentioned about dim sum bond. You mentioned about the JSIN on the equity side. Is it separate? Is it different in your company compared to the usual kind of work, how it works in international banks?
I can't compare directly because I have never worked with the other bank.
Okay.
But there could be some differences or similarity, certainly in terms of the compliance, the legal, regulatory requirement. I think CICC would be as par as the international bank because I said that we started as a joint venture with Morgan Stanley, and the reason the contribution of Morgan Stanley is to bring in all these international higher standards, especially compliance to regulation.
Okay.
So we also have this Chinese wall. Certainly in China, we have Chinese wall. In terms of primary market, secondary markets, and private information versus public information. But I think the difference between CICC is maybe because we are small compared with some of these international banks, is our management or hierarchy is rather flat. So it seems that everybody will know in terms of banking. My boss know what I'm doing. I know what the next colleague is doing.
Okay.
And also is we don't want to separate origination, execution,
syndication.
And so forth.
Okay.
We try to want one solution, which means that I may be the one who go and first meet the client, and then so-called originate and get the transaction opportunities, and I continue to do the execution. Certainly, I have my colleague to help me, but it doesn't mean that I know nothing about execution. I worked in the Hong Kong Exchange before. So all the listing rules I still remember. I know what can be done, what cannot be done. So the emphasis for CICC, and also because many of our colleagues, they joined CICC when they first left the school. So we call them CICC baby. We have a lot of babies. We have a lot of old babies now. So when they first joined, they can't go out to the market, client, and lock the door, get a business now. So what they did all this so-called execution or the fundamental, pitch book, analysis. So we start from that. So I think from CICC, everybody knows execution. But when the bankers move up, so he may have other assistants to do more on the detailed execution, but still he'll be able to know what is execution. And that make the clients more relevant, I would say this way, because at the end of the day, client need not just the originating idea, but as to how to put the idea into executable plan. So that's how makes CICC maybe a little bit different to other banks.
And what about the syndication team? I mean, those who are talking to investors, are they split, or the same client, I mean, the same employee can go to, or colleague of yours can go and talk to both and sell both equity and debt assets? I mean,
we have that kind of like separation work. It's more because people will be focused on what they could do well. First of all, in terms of the compliance, we have this private markets and the public market. That is a Chinese word, like many others international bank. So a department called capital market department. Then within the capital department, we have the DCM and the ECM. So ECM staff, they are more focused on equity, and DCM will focus more on the debt, because the investor itself will also separate. Because some of the investors, if they invest more of their money in equity, I think they're looking for high return, maybe tolerance to high risk. But some investors, they're focused in debt, which will means that they possibly want a very stable income. Don't give me too much risk, but I just want a very stable income. Don't talk too much about growth. That's not their favor. So that's also makes sense for us to separate the team into two.
Okay, good. Now I understand more or less clearly. And let's return to your experience with the recent Kazakh transactions. And I would like to talk about those 20% requirements to be placed, not ordered, but placed in the local market. We understand why it is offered and why the government is keen to, and regulators are keen to introduce that, because they are willing to have the local market being more and more developed. How realistic do you think this requirement in practice, and what needs to be done to attract more international investors to enter the local market?
I think, again, it's the experiences we have is not just the deal in Jiaxing listing on AX and Hong Kong EX, but also some other experience that what I see like in Hong Kong. As a regulators, before I joined CICC 16 years ago, and also throughout the years, there's just practice. Certainly, first of all, is whether that's technically feasible. Because people will say, oh, great idea, but we go to execution, then go to settlement, it goes to trading. I mean, bankers or the regulator, they usually will miss that part. But I think for us, for the AX 20% requirement, it has done a very good job. At least people find out, there's no big issue in terms of the execution, making sure the money can come here and then trade and settle. That is fundamental, very important. And I'm glad that AX, remember, being exchange is at least being able to deliver, to settle. And second is about the market, whether the market has the capacity or capability to do so. I mean, the liquidity, put it this way. Before I go to the AX requirement or the Kazakhstan requirement, maybe you can see the Hong Kong requirement. Many years ago, now recently Hong Kong has changed the rules, but still we have this a split for the IPO. at least 10% have to offer to the Hong Kong general public, 90% to the what we call international or institutional investor. They could be Hong Kong, they could be outside Hong Kong. And if the Hong Kong so-called the retail investor, they are showing more interest, they put in more money, we have to increase it to 25%, 20%, 30%, up to 50%. So that's just the Hong Kong market. And people will criticize, we never see it in London, we never see it in UK, in New York. Why you have a separate pool for the Hong Kong retail investor? But that was the history, because it started with all these individual investors, and they have continued to participate in the market. So we have this 10% rule. And going forward, the first of all is that 10% rules is meant to protect or ensure the participation of the retail investor in Hong Kong, provided they already have the ability or the capital to invest 10% in that particular offer. So if the Hong Kong Exchange say that no, at least 50% have to go to the Hong Kong retail investor, I think it will be very difficult for the bank or the issuer to manage. Because if all these Hong Kong investors, they can only put up 20%, but you are asking them to put 50%, it's a mismatch of the demand and supply. So what I see is the Hong Kong market has put it, I won't say perfect, because nothing's perfect, but a good balance is wants to take into account of the demand of all these Hong Kong retail investors, as well as the supply of the capital. So they set it 10%. But in some cases, especially the last offer, the Hong Kong regulators are willing to reduce this 10% to like 8%, 5%. I take into account too, again, first is the demand, whether there will be so much demand from the Hong Kong investor for this big company, and also the demand from the international investor, and also the supply. So I believe that having a benchmark or having a minimum standard could be good, but the minimum shouldn't be too high, which means that it may be more than the supply of capital of the domestic market. But even with such a percentage, the regulators can always be flexible as to consider case by case. And in fact, it's a change. There will be changes in the market. Just as I said, even in the Hong Kong market, the Hong Kong Exchange has just recently changed the rules. In some cases, you have to maintain 10%. In some cases, you have to give higher, like 20%, 30%. That's the market will decide. But the rules is more accommodating, taking into account against the demand and supply of the capital.
Okay, thank you, Barry. And let's talk about the listing procedures in Hong Kong Stock Exchange based on your experience. I know that following GSE, there are several companies at least considering to tap the Hong Kong market. And how complex, from your view, that process, from your standpoint, is it something more strict to your view? Like what are the eligibility criteria? What is the compliance, investor relations, and dual listing mechanisms? If you could share that information, that would be helpful for those companies who would be interested in tapping Hong Kong market.
Yeah. I think the Hong Kong market, Hong Kong Exchange has a very clear rules, for example, in terms of the financial eligibility, the minimum profit or revenue. Just think in terms of the size of the Hong Kong IPO, normally we will see company raising about $100 million. I would say 100 million to 300 million would be the most usually see case. Certainly we see some billion company, like earlier this year we have CATL, that CICC participated, they raised more than $5 billion. And Alibaba easily raised more than $10 billion. So, but again, we come back as to what we see to be the size that the Hong Kong investor, including international investor, participate in Hong Kong, would be more interested. too small the size. Anyway, the Hong Kong market is pretty mature, and they have been participated by a lot of these big international investors. So you won't expect them. They put in a small order. For any order, they may make maybe a few $100 million. A few million, a few $10 million. So that makes sense. For an offer of $100 to $300 million would make more sense. And in terms of the other regulation, I think the good thing is Hong Kong market has already built a very good reputation as the regulators. They ask very good questions. I mean, they always ask too much questions, I have to say. But
I've heard about the prospectus, the size of the prospectus, which is more than 1,000 pages. And I understand that behind that, they're just adding more information to give comfort to investors. But don't you think it's too much? I mean, 1,000 pages, it's quite big.
Yes. I think they're reducing it. They're reducing it in the past. One of the contributors to the state prospectus is what we call the property evaluation report. So no matter it's a property company or non-property company, so long you have the interest in real estate, you have to include that. So even like maybe I'm a bank and I have so many branches, then 100 branches make up 100 pages already.
Right.
300 branches become 300 pages just for the valuation report. So then later on, the Hong Kong regulators, they changed the rule. They said if you are not a property company, they have some kind of definition. You're not a property company, you're not obliged to include that state of property valuation report. Going back as to, I say, the reputation, yes, I do agree. Sometimes the regulators, even myself has been the regulators before, we learn by asking. Sometimes once we ask and then come back, market feedback is we don't need to ask that, or we ask a good question because it end up with a better disclosure. And the other day is we want the prospectus, the document, to be fairly disclosed.
Okay.
So the Hong Kong regulators has already built a reputation is if in terms of Chinese company, I think they know a lot. They know a lot to make sure that some of so-called the bad company will be kept outside the gate. And they also know the market. So something, maybe regulator doesn't want to, I use the term flexibility, practicality, but this way. They are more practical as to how it do business in China. So someone may say that it's a high risk, but it's manageable with adequate disclosure or enhanced corporate governance structure that will make that company listed. And it also makes sense for dual listing. Put it this way. Dual listing is, for example, a Kazakhstan company lists in Hong Kong. They have the Chinese management, they have the Chinese shareholders, investor. I think the Hong Kong regulators can ask very good questions to ensure that all these investors, all these shareholders, they have get the proper approval before they become the shareholders. Okay. So in the future, there should not be any dispute that someone come out and say that, no, they are not the shareholder. I am the investor. I think the Hong Kong Exchange, they have all these experiences and capability. But on the other hand, you go to Kazakhstan. Who knows Kazakhstan more than AIX? It must be AIX. It must be our staff in AIX. So this is a combination of the two experts. One who know more about the Hong Kong market, Chinese market. On the other hand, AIX, we know more about the local market. So the two regularly come together to make sure that this will be properly and adequately disclosed and relevant at the moment to relevantly disclosed prospectus. Otherwise, some of the Hong Kong regulators, they will ask many questions that because they don't know Kazakhstan.
Right.
And maybe irrelevant. And then from AX, we can have this sharing among the regulators that, we know that it's happening this way. Among the regulators, the cooperation and the trust, once it was built, it's benefiting the two markets.
Okay, good. And my next question is with regards to the sectors of economy. We talked about Kazakhstan. You mentioned the mining sector. And what are other sectors which Chinese, to your view, Chinese investors would be interested to invest in Kazakhstan? I mean, we talked about mining.
I know.
And we see that mostly there are quasi-sovereign companies. And are there any other sectors in Kazakhstan which, to your view, investors from China could be interested to invest in?
It would be easier if people make their decision based on the experiences. Certainly, there are some decisions that no one has the experience, but they make a very good decision and they make a lot of wealth. I mean, the experiences I had or we had is how we see China in terms of financial development. We started from all this basic infrastructure, like I said, the telecom, the oil and gas business, the mining. We did have a lot of mining, copper, aluminum. That was, I would say, the first batch of company that come to the public market in the 90s. Then after 2000, go to financial market. You have all this bank and asset management company. And later, maybe 2010 or before that, we have beginning of the tech company, Alibaba. I remember the first list in Hong Kong in 26 or 27. I mean, the old Alibaba, the B2B one. So that was the beginning of tech. And now we see some of this new technology like EV, solar power, battery, and even semiconductors coming to Hong Kong for listing. So that has been seen in China, in China, Hong Kong. And then similar experiences. Mining, everybody know mining in Kazakhstan. So this would be a very good foundation or fundamental. I said we have Kazakhstan, we have Cosmonaut gas, telco, telecom, all this infrastructure, that also be good. Logistics, we see Astana listed, and fintech. People may be surprised that we have such a sizable, or even I would say big company like Freedom or Kaspi listed here. They are focusing fintech in this region. So every economy will have their very different strength, but what I've seen is fintech could be also a very good candidate for listing in this market. They could be also very attractive to the investor. And when people see that those companies, they are not just in Kazakhstan single market, they are operating in Central Asia. So I think people come here, or AFC in a longer vision, is not just for Kazakhstan market, but for the whole Central Asia. And company like this fintech company, they are doing what AFC will be able to empower them. Listed here, but have the market coverage for the whole region. And the international investor, they rely on the regulation of AIX, give them comfort, the confidence that they are properly, all these companies listed here, they are properly managed, disclosed, supervised, but with the business not just in one market, but the whole Central Asia. That would be the benefit for AIX to the investor.
And what about the digital assets? Do you think that's the area which is has some potential for further growth? I understand that because we have clients coming to us and talking about tokenization, which is the opportunity to expand the investor base. How is it going in Hong Kong? In general, and do you think that if there are some tokenized securities coming to local market would help to develop the market in general?
Let's
split.
Yeah, to be honest, I'm not an expert in this digital asset. I'm more traditional one.
The same as me.
Certainly, we have to keep an open mind as to all this new technology or new product. For AIX being a new exchange, I would also recommend is be open mind as to what's happening. At least we have to keep on track of what people are doing. And on one hand, whether there will be business opportunities, certainly there will be, and there are business opportunities. We see the growth of all this crypto, as well as the tokenization of different assets in different markets. And theoretically, we also see that for all these assets, financial or non-financial, if they can be tokenized, which means that more people will be able to participate in the investment market. That's something good. But we also have to look into the risk.
Right.
I mean, the risk is if there are more people coming in, which means that we have to take care of more people. And we still have the concept of a professional investor versus non-professional investor. Professional investor, they are rich enough, they are sophisticated enough to take care of themselves. So which means that now we have to put more resources. If more of these individuals participate in tokenized asset. In the past, if you don't have $10,000, never thought about investment. Now, if you're $10, you can consider. But we have to protect these $10 people. So that would be the resources. That would be also the challenges to the regulators in terms of the law, in terms of the enforcement, in terms of education. When we have a good balance between two, business opportunities and the protection to the investor, certainly we should move fast.
Okay. Thank you, Barry. That was interesting discussion, and thank you for taking time and coming, visiting us. We wish you great success and a lot of interesting transactions out of Kazakhstan where CICC is a lead manager.
Thank you. Thank you very much. Thank you, Aselь. I really honored to have this chance to come here and be interviewed, to share some idea, but more importantly is to witness the growth and the achievement that we see in AIX in the last few years. Thank you very much.
Thank you, Barry. Thanks.